Hello and welcome to the look ahead for Friday, the 5th of March, with me, Fiona Cincotta, Senior Market Analyst at City Index. So, kicking off tomorrow, we've got German factory orders, we've got Eurozone retail sales data, Canadian unemployment figures, and also the US non farm payroll. So, we'll just kick off talking about the US non farm payroll, which is the highlight of the economic calendar this week. Expectations are for 200,000 new jobs to have been added in March. That's down slightly from the 275,000 in February, and would also mark the lowest level since November last year. Now, if we have a think about what's been going on, the sort of precursors to this data, the lead indicators, when we look at the employment component of the ISM services PMI, that actually increased, as did the employment component of the ISM manufacturing PMI, that also increased. ADP payrolls were also up and stronger than expected. Jobless claims also increased, but just very slightly. So I think if we take those lead indicators into account, then perhaps we could be looking at a slightly stronger than expected US non-farm payroll. Now, unemployment is expected to hold steady at 3.9%, and wage growth is also expected to tick up on a monthly basis to 0.3%, up from 0.1%. Now, a stronger US non-farm payroll could unnerve investors a little bit, just as far as the Fed's ability to be able to cut interest rates 3 times this year. If we're still seeing that strength in the US jobs market, that does also mean that perhaps the US economy is going to hold on to its resilience, and inflation may prove to be stickier than expected. So just having a look here, this is the gold chart. Gold, obviously non-yielding, tends to perform better in environments of lower interest rates, and it's been rising firmly, hitting a fresh all-time high today after Federal Reserve Jerome Powell's comments yesterday, which the market interpreted as being dovish and supportive of the idea that the Federal Reserve will cut interest rates this year and potentially cut 3 times. If we do get a stronger than expected US non-farm payroll report, then we could see yields rise and the US dollar rise, and that could put pressure on the spot gold price. Just as far as figures to and levels to be watching on gold, as I said, it hit an all-time high of $2,304 today. I mean, it's extremely overbought, as we can see. It's been trending quite sharply higher. Now, as far as support levels are concerned, there doesn't really seem to be much in the way of support until the 2,222 level. And even then, that's probably a minor support, with the first major support in at 2,195. Still, with those extremely overbought conditions, we could expect to see at least some consolidation at this level. Buyers are going to look to want to take out the 2,304 level and push on towards 2,400. So just having another look at what we're expecting tomorrow, we've also got German factory orders. Now, German factory orders are expected to rise 0.8% after falling 11.3% month on month in January. So in February, we're looking for a very slight improvement. But I mean, we know from the manufacturing PMI data that we had earlier this week that the manufacturing sector in Germany is weak. It's in contraction. It's in deep in contraction. So I'm not really expecting data to show anything else as far as the German manufacturing sector is concerned. Interestingly, we are seeing that the German DAX has eased off all-time highs. Now, this has had a tremendous rally over the first quarter of this year and last quarter of last year on expectations that the ECB is going to cut interest rates, the Federal Reserve is going to cut interest rates, and that's supportive of further growth. We did see the DAX reach an all-time high of 18,634. It has actually fallen away from that all-time high, and it's fallen below a rising trend line that it had going back to February. It's just trying to get back over that rising trend line as we speak from the gains today. But as far as levels to watch here, then on the downside, sellers are going to be looking to take out the level of 18,240. That is the weekly low, and if they can get a break below that, then 18,000 is another key level there to be watching. That's the key psychological level. On the upside, if bulls can pick up or maintain the momentum of the rebound from the weekly low, then we'll be looking at 18,470, Monday's low, ahead of that all-time high of 18,634. So also we've got Eurozone retail sales. Now, as I mentioned, Eurozone retail sales, they're expected to come in down 0.4% after a 0.1% gain in the previous month in February. Basically this is just showing us that I think, the consumer in the Eurozone is weak. We know that they're experiencing an economic downturn, although we have seen perhaps suggestions that economic downturn could be bottoming out. We've seen the service sector actually upwardly revise the PMI data for March, which is an encouraging sign, suggesting there is some momentum which is coming back into the economy. But as I said, that's not expected to be shown in retail sales. Now let's just have a look here. This is the euro US dollar. We've seen a really impressive rebound from that 107.25 level, but I think a lot of this is actually US dollar weakness. We've seen the US dollar fall sharply away from its 5-month high. It now trades at around a 2-week low, and that's just on these expectations that the Federal Reserve could keep cutting interest rates, or that's exactly what sort of we've been hearing from Federal Reserve Chair Jerome Powell and his colleagues who have been speaking this week. So as I said, there's a lot of US dollar weakness playing out in the euro US dollar pair. As far as the technicals are concerned, the euro US dollar has rebounded, as I said, over that one from 107.25. It's retaken the 200 SMA at the 108.35. It's at the moment, the weekly high is 108.76 reached today. It's just eased off that level, but that's the level that buyers are going to be looking to get back over to then test the 109.85, which is that March high. If we don't get a rise above that weekly high, then we can get a retest of the 200 SMA. That's, as I said, 108.35. And then below that, the 107.25 is the level to be watching. And just finally, as well as employment figures from America, we've also got employment data from Canada. Now, the Canadian unemployment rate is expected to tick higher to 5.9%, up from 5.8%. Going to be watching here the job creation level, which rose by 40,000 in the previous month. Expected a slightly moderated growth of around 25,000. Now, the data comes ahead of the Bank of Canada interest rate decision on the 10th of April. The Bank of Canada have left interest rates on hold at 5%. The market's expecting the Bank of Canada to is being fully priced in a rate cut in July. So, there are some signs that there is the growth in the economy has slowed. It has seen growth in the final quarter of last year, but as I said, there are signs that growth is starting to slow. And I think if we do see slightly weaker employment data from Canada, and we see strength in the US one, then we could find that US dollar, Canadian dollar actually sort of does rebound higher. Up to now, we found that the USD CAD has fallen down to a multi-week low, and that's basically on the weakness of the US dollar, as we've talked about, but also the strength in oil prices. Oil has risen to a 5 month high, and that's supporting the loonie. Now, as far as levels to watch here, we've got the loonie is actually just testing support of the 200 SMA. That's at the 135 level. The weekly low, if we do get a move below that or a close below that, the weekly low is 134.80. So that's going to be the level that sellers are going to need to break below in order to bring 134, which is the March low, into focus. If that 200 SMA does actually hold and buyers manage to defend that level, then on the upside, we're going to be looking for a move above the 135.70, which is that rising trend line that you can see there that dates back to the start of the year. We're going to move above that, then we'll be looking at 135.85, which is the weekly high, ahead of 136.15, which is the 2024 high, which was achieved in March. So I do hope you like what you've been watching. If you do, then please do give this video a like. And if you would like to receive more videos like this, then please do give us a follow. Thank you.